Hello guys, this is Lex Education where we try to simplify your learning as much as possible. You're welcome back to the channel. I've been dishing out several videos, unraveling different forex technical indicators and how you can use them to make yourself very profitable in the forex market. I hope you have been taking advantage of them. Today, I want to show you another strategy that you can backtest over the weekend and try out in the new coming week, okay? So we're going to be making use of the indicator Bollinger Band. Now, I'm not going to be going into details explaining how this indicator works because I have done that already in previous videos, okay? So let's add that into the chart right away. So we'll go straight to adding our indicator, the Bollinger Band. Now we're going to be making use of the period 20, deviation 2.0, shift 0, apply to close, and then I'm using the green color. The color doesn't matter actually. Now it's been added to the chart. Yes, so this is how the Bollinger Band looks. Okay, that's how it looks like. Then we're going to be making use of another beautiful indicator which is called the Stochastic Oscillator. Now I'm going to be adding that straight away to the chart. Stochastic Oscillator. Let's look out for it. Yeah, so this is the Stochastic Oscillator and we're making use of the period 14, the other one D3, percentage D, 3, slowing 3, and all of that. Okay, so just take note of these different details, and then you need to also take note of the levels. Okay, so we're making use of levels 20, 50, and 80. Very, very important in the strategy. So we'll add that to our chart, and yeah, so this is what the stochastic oscillator looks like. Okay, now how does this strategy work? I'm kind of rushing through the video because I do not want this to take so much time. How does this strategy work? So please pay keen attention so you don't miss out on the details. Now I'm going to go look out for a sell position on the 4 hour time frame. So the first thing is I'm going to try to ensure that the Bollinger Band moves out of the upper band. Okay, like in this case you can see the on the H4 time frame the Bollinger Band is out of the upper band. Then what do I do? Okay, so the Bollinger Band, the price must move out of the upper band, and also on your stochastic oscillator, okay, you must have your your stochastic oscillator must also be above levels 80. Okay, very important, must also be above levels 80. Now once that happens, you go straight to the H1 time frame. Now on the H1 time frame, what are you expected to look out for? You need to look out for the price on the stochastic oscillator. You need to ensure that the indicator has dropped to levels 80. You need to ensure the indicator has dropped to levels 80. Okay, remember we're looking for a sell position. Now when that happens, you'll notice that it culminates or almost culminates with your M15. Okay, on the M15 stochastic oscillator dropping to levels 50. Okay, now I would want to advise you, you need to ensure that the indicator touches level 50 on the stochastic oscillator, because a lot of people will jump into things like this and then they are tagged out and they wonder why the strategy didn't work for them. When it doesn't touch that, it simply means that the market is still going to have to consolidate a little bit more. So I need you to wait for it to touch the levels 50. As soon as it touches it, then you can storm into the trade. Okay, very, very simple. Now, where do you place your stop loss? Your stop loss would just be placed just above the eye. Okay, the high that was created. And then what would your take profit be? Very simple. For your take profit, just wait for price to drop to touch the lower Bollinger Band on the H1 time frame. Okay, on the H1 time frame. That is very, very simple. Now let's look out for sell for buy positions. Now I'm going to go straight also to the H4 time frame. Now remember the first thing I said, the on the H4 time frame I must have the Bollinger Band. Price must drop out of the Bollinger Band. So like we can see in this case, the price already out of the lower Bollinger Band, and then also on the stochastic oscillator the price is below what is below levels 20. Okay, then the next thing I'm going to do is to jump straight to the H1 time frame. Now, when I get to the H1 time frame, what am I looking out for? Remember, I said in this case, now price would have to turn, okay, to rise up to levels 20. Okay, so as soon as you notice that the price has risen up to levels 20, then you move straight to the M15 time frame where you are going to pull the trigger. So let's move to the M15 time frame. Yeah, so on the M15 time frame, remember what I said, the price must touch levels 50, okay, of the stochastic oscillator must touch levels 50. That is when you can confidently enter the trade. And then where do you place your stop loss? Just below the low, okay, of the last candle. And then where do you target? Take as your target, take profit. Now you are going to have to target the H1 time frame. You're going to have to target the H1 time frame, the upper Bollinger Band of the H1 time frame, upper Bollinger Band. So at this point, this is where you should be exiting the market. This is very simple and a very, very profitable strategy, guys, that I would like for you to backtest. Okay. Now, I even remember telling you guys that on several occasions, I've told you that whenever I say we're starting with a particular time frame and all of that, it doesn't mean that that is the only way or time frame that you can use to run the strategy. Okay, so I'm going to quickly show you another time frame combination and how it works. Okay, so guys, remember I've been making use of the combination H4, H1 and M15. Now I want to show you how it works in even other combination. Okay, so this is my H1 time frame. That's what I'm going to be using as the highest time frame. Now, as you can see, price is already for a buy setup, price already out of the Bollinger Band, the lower Bollinger Band. So I'm moving straight to the M15. Now remember what I said, the M15 price must have to touch the on the M15, the second time frame, price need to touch the levels 20, and then we move straight to our entry time frame, which is the M5. When I move to the M5, what do I expect? Price must on the M5 touch the levels 50, as you can see. Okay, so that is it. And where do you place your stop loss? Just below the low. And then where do you target? You go to M15 and target the upper Bollinger Band. Okay, so guys, this is a very beautiful and simple strategy, guys. I want you to backtest it, and then if you've enjoyed this video, please do not forget to give it a thumbs up. Okay, like the video, and if you're a first timer on this channel, please hit the subscribe button and turn on the notification bell so you'll be the first to be informed the next time we post a new video. Thank you for watching and see you in the next video.